Mortgage Minute today, being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make that call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. Way too much green on the screen from yesterday. But hey, let's take a look at it. 30-year conforming loans yesterday. This is what OBMMI tells us about rates. No APRs, no points paid, no points received, just the raw interest rate on average that they locked at. 30-year conforming was up a little bit, 6.70. 30-year jumbo, that was up a bunch. 6.92. 30-year FHA up a little. 6.641. The USDA 30-year rural areas, generally no down payment, 6.521. That was down a little bit. And the 30-year VA loan, that was down a little bit, 6.413. Let's move to today and see what's happening. The 10-year Treasury is down 4 basis points, 3.79 is the yield. S&P 500 is up 14.62. And the mortgage-backed securities are down just a little bit. Down 5 basis points means interest rates are up a little. And that shouldn't be going that direction, shouldn't be going down today when we got good news. So let's take a look at it. And it kind of ties in because we've been getting some very, very bizarre reports on things. Let's see. Let's take a look at this one here. Stocks lower, mortgage bonds slightly higher after another favorable inflation report. The response in bonds has been bizarre, as the sharp declines in inflation would normally be very favorable for bonds. Looking back to yesterday's CPI report, headline CPI fell from 4.9 to 4%, while bonds initially had a positive reaction. They sold off as the day went on. David Rosenberg said, "Who knew that the Treasury market of all asset classes would disapprove of the third most intense inflation decline from a peak in the past 7 decades. In just 11 months, the inflation rate has plunged 510 basis points. That would be 5.10% to 4% on the news." Peter Bookvar and Lacey Hunt shared the same sentiment. "We know how important shelter costs are in the CPI, and interestingly, if you removed shelter, CPI would be up 2% year over year and up 1.6% annualized over the last 6 months. We know how badly this number has been lagging and has been elevating the inflation numbers, but the bottom line is that inflation is falling at a good clip. If you were to replace the shelter costs with more real-time rental and housing index figures, as well as used car data with the Manheim Index headline, inflation would be at 2% and core would be at 1.5%. You can always make numbers say whatever you want them to say. Today we get the Producer Price Index. The May Producer Price Index report showed that overall producer inflation decreased by 0.3% in May, which was even lower than the 0.1% drop expected. Year over year, producer inflation fell from 2.3 to 1.1, which was much lower than the 1.5% anticipated and the lowest level since December 2020. Core rate strips out food and energy prices, rose 0.2% in line with estimates. Year over year, core inflation declined 3.2% to 2.8%, which was cooler than estimates of 2.9%. BLS said over 40% of the May increases in prices for final demand services can be attributed to margins for autos and auto parts retailing, which rose 4.2%. As I've shared with you before, the big news is going to be the Federal Reserve's meeting later today, or their announcements later today. Not the meeting, because they've been meeting since yesterday, but their announcements is going to be the big issue. So 11 o'clock our time, we're going to get their Fed announcement. They're going to tell us what's going on. And then at 11:30 our time, that's when the real news comes out. That's when we're going to see the information from them. And we're going to hear about what the Federal Reserve is up to, what their thinking is, what the chairman's commentary is. That's what we're going to get at that time. So we're going to be watching that. That's going to be the key issues for you, is what does the Federal Reserve have to say? And they constantly are giving us data. Get all of the different the Fed presidents and whatnot coming out and giving us their information and what they're thinking. But then the bottom line is we need to understand what the commentary is in the actual meeting. We want to know where their thinking is, what they're doing, what their future is. What are they forecasting? When we get that data, that's where it really starts to help us understand what the markets are going to be doing and what their plan is. We want to know, do they plan on increasing rates? Do they see the economy like we see the economy? Are they looking at it through a different lens? What's their point? That's the Mortgage Minute, again, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make that call, 800-306-1990, 800-306-1990.